Debt. It can feel like a never-ending cycle. At Family Credit Management, we'll give you a roadmap out of debt. For over 20 years, we've been helping clients get back on track to financial independence. Get your free quote today.
Hey, we're back another week. My name is Letitia Griffin and I'm here with Family Credit Management today to talk to you about any issues that you may be having regarding your debt, your finances, any questions that you may have. And we're here for the next 25 to 30 minutes or so just to answer those questions for you. So if you would like, you can call in 312-738-1060. Or let's say you don't have enough time, or you just aren't comfortable talking on air, that's okay. Because you can go online to Family Credit's website at familycredit.org, or you can reach out and talk to a counselor at 800-994-3328. And you can do that and get all of your questions answered. So I want you to see that as a really valuable resource for you to use, because a lot of times you don't know where to go to get the help you need, and Family Credit is a great place to go. So we've been talking about debt, finances, and all of that for the past couple of weeks. And today we just wanted to touch on what a lot of people have questions on, and that is really what we consider the American dream, or achieving the American dream. We've got a lot of questions come up about buying a home, achieving home ownership, or if there's anything that you can do so that you know whether or not owning a home is right for you, because it's not really for everybody, but we all do want to have that American dream. And what happens when you buy a home that allows you to create wealth and start creating wealth that you never even thought about, because the home is seen as the number one asset. So what happens when you buy a home? Well, you not only buy a place for your family or for you to live, you buy someplace that will just continue to create wealth. And what that means is that you have something called equity. And equity is honestly something that we all wish that we could have more of. With that equity, it's kind of like we're saying that we've got some extra money or assets just laying around, but it's all put inside this home for you to live. So we've got some clients out there, we've got some people that have asked about home ownership, so that's what we want to focus on today. Now, when you're thinking about getting a home, first thing you want to do is realize, a lot of people say, I want a home because I don't want to keep paying my landlord, or I don't like the area that I'm renting in now, or the amount that I pay for rent is either too much, or I just can't afford it. So these are some reasons why you want to look at seeing what you can possibly do, what you can qualify for, and whether home ownership is right for you. There's so many different programs that are available throughout the city, throughout the suburbs as well. So you may want to reach out and figure out what can you actually qualify for. The first thing that you want to do, though, is make sure you've got yourself in order, because you're not going to be able to get anything unless you make sure that you qualify for it. The way that you do that is by taking time to go through your finances, to go through your debt, and we'll talk about that a little bit today. Again, if you've got any questions, feel free to give a counselor a call, 800-994-3328. Again, those counselors are standing by to answer all of your questions. So when you think about getting a home, there's a couple of pieces that fit into it. It's just like a puzzle, or, you want to make sure that you have all the pieces that fit together correctly. Last thing you want to do is get turned down. And so I do caution that if you are looking at or thinking about buying a home, perfect time for you to even look and make sure that you're doing right or that you qualify, maybe even 6 months before you plan on actually making that move. You want to know what you can get yourself into. Perfect way for you to do that, you want to take a look, of course, at your credit report. Again, we're focusing on credit here. Everything in this world revolves around credit, and getting a home is that important, that it does base a large part of whether you can get a home on what your credit report looks like. You can't possibly get a home without knowing what your credit is, or a little bit about your score. So that's the first step that we want to do. You actually do want to take a look at your credit. Looks like we've got our first caller. Hi, welcome to the show.
Yeah, I'm renting right now and I want to buy a home. How do I know if I qualify?
Okay. Well, that's a really great question. first thing you want to do is talk to a professional about whether or not you do qualify. And out there, you've got people that are able to approve you for a home, and there's a couple of different places or things that you can actually do. Again, we want you to look ahead of time, like I said, 6 months in advance. And I do think that a good place for you to start is just looking at your credit report. So you want to take a look, and you can reach out to a counselor, and they can help walk you through that. They're the perfect person to actually help you with that. And you want to contact either what's called a loan officer first, because you want to know what you qualify for. Now, a lot of people, they think that when they want to get a home, they should contact a realtor first. And you may say, well, what's a realtor? How's that important in my transaction? A realtor is actually the people that will actually show you the homes. And that's what they do. They figure out what you like, what you dislike, and they will figure out the different neighborhoods, areas, what's comparable to what you like, and base their selection off of that. But you can't really tell them what you like or what you can start looking at homes until you know whether or not you qualify for the home. So the best place for you to do that is talk to a loan officer. Now, you can find loan officers everywhere. You can get recommendations from a counselor as well, from a credit counselor. You can also get recommendations throughout the city of Chicago. They've got some programs and some people, some key banks that work with mortgages. You can also contact your banking institution, financial institution, or credit union to see who you can talk to about it. But again, before you do that, you want to make sure that you got yourself in order. So look at your credit report. When you think about getting a home, what do you think a credit report is good for? To show you if you want to get a home. Well, it shows just your character. And your credit report, a lot of people, we all forget, we're so focused on what our credit score looks like, but that actual report goes right along with it, and it shows your character on how you pay your bills. Can you pay a mortgage? The credit report is the perfect place to go, because guess what? It shows, hey, you've paid your bills on time, or there's been some trouble or whatever's going on, but you've got your credit report and it's been there for years. Score, again, only looks at the last 24 months worth of history. So when you're thinking about your credit score, yes, you do need a high credit score, as high as possible when you're thinking about getting a home. But it doesn't stop you, because there's a couple of different things that you can do. So we've got what's called a conventional mortgage and what's called an FHA mortgage. Now, a conventional mortgage really is for those who have like a better score. You're looking for a lower interest rate because you have a better score, and we'll go through that a little bit later on. FHA loans are guaranteed by the government, and they say that the government is putting up their money saying that if something goes wrong and you do not pay, that they will pay the bank off for you. Doesn't mean that you don't have to pay them, though. That's another story. But with an FHA loan, the government is regulating and putting their neck out there on the line. So they want to make sure that you have the ability to pay that loan back. And what they're looking for, it's not really hard. You need a score of at least 580 in order to get started with looking for a home. And FHA will let you do that. Now, if you've got a score, when you're buying a home, 580 is considered to be kind of a low score. So what you want to think about, though, is if you've got a score of 580, guess what you need? You have to come to the table with something. So you have to make the deal a little bit sweeter. So even if you've got a lower score, you need to have what's called some assets. You've got to have some money there in order to support the transaction. So if you have a lower score, then you want to look and see how much can you actually save up each month. Do you have retirement that you can use? Do you have money in your savings or your checking account that will help you be able to buy a home? So think about those things. If you're looking to get a home, you've got a lower score, the more money you have, the better. Now, remember, you can't really get anything for free nowadays. So you want to make sure that you are putting something into the game. So if your score is not up to par, then you want to look at having more money on hand to make that transaction go through. Also, you want to think about that with your score. A lot of times we look at, well, is now the perfect time to buy, or should I wait? Should I do some things with my score? Again, that's where credit counselors come in, and they can help you with that too. So we've got another call, and then we'll talk a little bit more about that. Hi, welcome to the show.
Oh, hello. I was wondering, do you know about how long it takes after filing a bankruptcy where I can get a mortgage?
Great question. So a lot of people struggle with that too because they want to buy a home but they file bankruptcy. But typically if you are looking at buying a home and you have filed bankruptcy or you're thinking about filing bankruptcy, you do need to wait at least 2 years if you want to get an FHA mortgage. And that's again secured by the government. Now, it is possible for you to get a loan before then. But you do have to, let's say if you're in a Chapter 13 bankruptcy, and remember that Chapter 13 is where you set up a repayment plan each and every single month and you're making payments. So if you have made at least a year's worth of payments for an FHA loan or what's considered a VA loan, which VA, those loans are out there for veterans, we'll touch on that, or USDA loans, which are in rural areas, if you have at least 12 months worth of payments and you are in a Chapter 13 bankruptcy, then you can get a home. But guess what? There's a little catch. You do need to get permission from the courts in order to do that. And they want to make sure that you're able to make those payments. We all know things happen. But after that, what happens? What have you done to make sure that you're back on track? And that's really the reason why you want to show that. That's why you do need a judge's permission to sign off on it. Now, if you're thinking, okay, I want the best rates out there possible, and I want to make sure that my fees are less, and you file bankruptcy, then you do, if you look at getting what's called the conventional mortgage that we talked about a little bit ago. If you're looking at the conventional option, then you will need to wait 4 years before you can actually look at getting a mortgage. So keep those in mind. It is possible. You can do the FHA after 2 or the conventional after 4. Now, we touched a little bit on, or talked a little bit about the different types of loans, and of course the FHA loan is secured by the government. But there's also there's a couple other loans that are secured by government as well. And these are your VA, and VA loans are directly for veterans that have served in any branch of the military. They're able to get a loan, and you qualify for a loan by putting down less. And it does depend on the service that you were in, and so you'd have to give that information. The other loan that's secured by the government is a USDA loan, and those loans typically are in rural areas. So a lot of times you can find even up to 100% financing in a rural area as well. So you want to reach out, look at your help, see if you can find some help about getting those types of mortgages. And I want to bring those up too because a lot of times we think about, yeah, I want to get a mortgage, but I want to make sure that I'm okay and I can qualify for it. And I've had some problems in the past. So even if you've had bad credit, you just need to work on getting things together right now. Another thing you want to do is make sure that you have the money coming in each and every single month because you've got to pay this mortgage. And we need to make sure that you have a budget set up or set in place and know the amount that works for your budget. You don't want to go over that. A lot of times our eyes are bigger than our actual budget or our wallet will allow, so you want to make sure that we can actually afford those payments. So when you're thinking about that, you want to know what amount each and every single month can you afford out of your budget to go towards your mortgage and to go towards the full payment that's going to be coming out, and also to be able to afford a down payment. So keep that in mind. When you are thinking about a home, there's so many different intricate parts that go into it. And again, the number one thing you want to do is look at your credit. Next, number 2, you want to focus on your budget because you don't want to overspend. But also, you want to make sure that you have enough for a down payment. And the down payment that you put actually just shows what your skin in the game is. So typically for a conventional loan or, a traditional loan, to get a mortgage, you need to put at least 20% down. For a lot of us, that's nowhere near even possible. If you are looking at a $100,000 loan, no one really has, 20% of that just laying around in their accounts. So that's why we're able to do that by looking at the FHA loan and other types of conventional loans, which will let you put down a lesser payment. But you've got to save that amount up. So how do you get to that? You want to look at your budget, and you can actually contact a counselor at Family Credit or just figure out what you actually qualify for. So the counselors, they do have what's called My Personal Spending Plan. Let me see if I can find a copy of that here too.
Debt. It can feel
And we
like
can
a
get that
never-ending
shown
cycle.
for you in a second. Now, if you, again, Family Credit's website, familycredit.org. I want you to go to that website, and I've got a copy of it right here for you. If you're looking on the website, you want to go down to Personal Finance Made Easy. This course right here will help you establish goals and create a realistic spending plan. And this is important because you can actually download this. It's free, it's easy, and it's something that you can go through to help you set up a spending plan. I point that out because a lot of times we look and we struggle with how do we know if we can actually afford those luxuries out of life, those things that we want. And this will help you get there. So we want to look at your budget, of course, make sure you've got that down payment saved up. And another thing, you want to make sure that you have the income to support the transaction. We'll talk about that in a sec. Looks like we've got another caller. Hi, welcome to the show.
Hi, when refinancing my mortgage, can I get extra money at closing so I can pay off other debts?
Ooh. Now, a lot of people don't even know that that's even possible. So her question was, she's looking at closing, and she wants to know if she can get extra money to help pay off some of her debt. Now, there's a lot of different things that you can do when you're looking at buying a home. And sometimes we may not even be able to afford the down payment, or we can just don't want to use all the money that we have. And it's really up to you as far as how much you want this home and how much the seller is willing to work with you. And so a lot of times a seller can offer what's called a seller credit. The seller credit actually balances out the amount of money that you're supposed to be bringing to the table. And depending on what type of loan it is, that depends on how much the seller can actually give you. So if you've got a $100,000 loan, typically a seller can give you anywhere between 3 and 6%, depending on the type of loan it is though. So let's say you get about $6,000 to help close that transaction. You also need to put down the money that you've promised, and typically with FHA, you tell them you can put down 3.5%, or with a conventional, you can put down 5%. Now, let's say you put down the money that you have, and they give you a seller credit. And so now you have more than enough to close out that loan, and guess what? They will give you a refund back of that difference, and you can use that money for whatever you need it for. But those transactions can get kind of tricky. You do need to make sure that you have the money saved up though, and you're not relying on others. Now, there are programs throughout the city, throughout the state, and throughout the nation that can help give you down payment assistance, because sometimes we know that we can afford the monthly payment, and let's say, you can afford to pay like $1,000 or more each and every single month because that's what you're paying in rent, but you just don't have the down payment right now. So there are programs out there that can help you. And what happens with those is that you still need to prove that you've got money in the bank, that you've got some skin in the game. So you still need to save up for your down payment. But if you are eligible, again, you have to be eligible for it, you can get down payment assistance. Now, with the down payment assistance, you can receive anywhere between, there's some down payment assistance programs that'll just give you a few $1,000s, and then there's some that'll give you $10,000. Then if you are a service member, or you are a police officer, or some other type of service, you're in the service industry, or there are some programs that out there that will give you up to $30,000. It just depends on who you are, what you're looking for, and what you qualify for. Now, a lot of the down payment assistance programs, though, they do have an income limit. So you have to make up to a certain amount. And sometimes the homes may need to be in a certain area as well. And that's what your loan officer can help you navigate. And you can just find out what you qualify for. And sometimes you can even qualify for more than one program. So that money is out there for you. But you do have to show that you've got some type of skin in the game too. So whatever you can save up, I do suggest you start saving now. Again, looking at your credit report ahead of time, looking at how much you can save for that down payment, that will save you a lot of headache. And you need to make sure that you can show that you have at least 2 years income, documented income information. So if you work for a job, you get a W-2 each and every single year, and you need to have at least 2 years. Now, you can switch jobs. Let's say you are a nurse, you're at one hospital, and you switch to another because you're going to be making more money. You can do that. But you need to show 2 years of consistent job history in the same industry. Also, there's some people out there, pay attention, be careful when you're filing your taxes, or sometimes an accountant may just even be trying to may even try to sell you on, they can give you the biggest refund or get you the biggest amount of money back. And sometimes they do some things that need to be careful with. I have seen some clients that will come to me and they say that, hey, guess what? Here's my tax returns. You need to be able to show at least 1 to 3 years worth of tax returns if you're looking to get a house. And some people say, well, I haven't filed taxes yet. Another thing you want to do, because if you haven't filed taxes, if you have not reported your income to the government and you have not told them about that income, guess what? They are in no way, shape, form, or fashion allowing you to purchase property if you haven't even told them how much you make each and every single year. So you want to keep that in mind. Make sure you've got your taxes in order. But again, we're talking about having a down payment assistance, and being able to get some money back to work on our debt as well. Sometimes a loan officer can help you structure into the file or into your loan where you may need to pay off some debt. You may have some problems. So there may be some things that you want to do to look at your debt. Again, you can look at some options with a counselor that can help you with that. Or you can see what can be included, like the caller asked about. Can you include some of those so that they're paid off at the closing? And that's possible too. Looks like we've got another caller. Hi, welcome to the show.
Hi. Does my credit have to be good to get a mortgage?
Ooh. So your credit needs to be at least at about a 580 in order to qualify for an FHA loan. If you want to go the conventional route, you can do that as well, but you need a score of at least 620. Now here's the thing, the lower score, the higher your interest rate is going to be. So if you can get your score higher, and if you know that you can take a few months and do that, then that's going to make things better for you. But yeah, you can get a mortgage, and you don't even need to have a really, really high score, just a 580. Here's where the counselors come into play though. Because if you know, let's say we're looking at 6 months down the line, you're going to be getting a home. Even let's say 3 months down the line, you want to buy a home. You can have them pull your report now and go over everything with you to give you the advice that you need to make things better for your financial situation. You look at the different things that are on your credit report. The credit cards, not just credit cards affected. Medical bills will affect your credit score. You've got medical bills that you probably don't even know you have that are on there. You've got accounts that could be in collections. I've even seen repossession stop some people. So those are some things that you want to be aware of. You want to look at ahead of time, and that way you know what you're getting yourselves into. And also you're going to be working on saving so that you can combat a lot of that too. So again, when you're looking at your credit score, you're looking at everything that you need to get a mortgage. You've got your credit score, you've got the money. You need to have money in the bank too to support the transaction. How much is enough? As much as you can possibly get in order to save up for your house. The more money you can show, the better. And a lot of times, what a lot of people don't realize is you may only have a few $100s in the bank, but you may have been putting away for years for your retirement. You can show that you have assets in your retirement, and a lot of times you're not even required to take all of that out. But to show that, yes, I do have money because I have my retirement here. I've got some mutual funds. I've got this money that's not necessarily liquid, but it is here. It is available. So those are things that you want to think about. You've got the money. Have you filed your taxes? You want to have that in order as well. And your job history. Again, keeping in mind that if you got some self-employed income showing, or you taking a loss on your Schedule C, we've got to count that has to be counted as well. So that's going to be subtracted out of your income, which is why you want to make sure that your taxes are done right so that you get the most bang for your buck. You want to know ahead of time what you qualify for, so you do want to reach out, but you've got to get things in order before you get to that point. And this is the first step. Think of it as like baking a cake. You want to buy a home, you can reference this as looking at baking a cake. You want to make sure you create the whole picture. You want to have a good cake, right? You want to make sure all the ingredients are there that you're going to be putting into that. So what are those things that you need for a cake? You know, you need flour, sugar, baking soda, whatever you need. You want to make sure that all of that is good, right? Same thing with buying a home. Same thing with making sure that your credit is together. You want to make sure ahead of time, before you go in, before you apply for anything, that your credit is together and that you know what you're getting yourselves into. So you want to put that complete package together. And that's looking at your credit, your budget, your debt, and working on an action plan that will get you to where you need to be. So if you got any questions, again, reach out to a counselor. They're on standby. They're ready to answer any questions that you may have with dealing with collection agencies, your credit report, your credit score. And if you've got any other questions, we'll be back again next week. So you can always feel free to ask us those questions too. Again, everything that we've talked about today, it does paint a picture of you having your own financial freedom and being out of debt and making sure that you can afford whatever it is that you set your mind to, because that's what our goals are built upon. So again, until we see you again next week, you all take care.